Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, I must say the past month has been very significant for real estate investors. Firstly, the March quarter inflation numbers came in. And when we talk about inflation, we talk about prices going up. Well, in the March quarter, they went down. The average basket of goods and services that the Australian Bureau of Statistics looks at actually fell in price 0.2% on average. Leading the way was petrol prices, which were down substantially with the oil price over the month. This means that the annualised inflation figure for Australia is now just 1.3%, which is well below the normal band that the Reserve Bank tries to hit of around about 2 to 3%. So the big question is, does this mean the RBA will cut rates? I think we're a 50-50 chance now for a rate cut in the next month or so. That's got to be good news for property investors, though I must say the Reserve Bank is worried about our super strong housing market at the moment. A casualty of the lower than expected inflation number was of course the Australian dollar, down from 77 cents to around 75. Having said that, over the past few months the A dollar has in fact rallied from the late 60s where it was just before Christmas to the mid 70s where it is now. Now, politics has taken a rather unusual turn for property investors. Firstly, the Victorian state government budget came out just days ago, and it had a bit of nasty news, particularly for overseas investors. First, if you're an overseas investor, the stamp duty surcharge that you pay is now going to be lifted from 3% to 7%. Secondly, if you're an absent landlord, the land tax surcharge you pay will lift from 0.5% to 1.5% per annum. The Victorian Treasurer Tim Pallas said he had no plans to increase taxes on Victorians, but he saw absolutely no problem with lifting taxes on overseas property buyers. The other big political issue that's coming up that should concern property investors is of course the subject of negative gearing. Now, there's not a great deal that differentiates the two major parties at the upcoming federal election, but negative gearing is one of those things. Now, the federal government under Malcolm Turnbull has said they will not touch the rules about negative gearing. However, the Labor Party says if it wins the federal election, the rules about negative gearing will change. Now, Labor's plan is this. As of 1st of July 2017, the only type of property you'll be able to negatively gear as an investor will be a new property, one that has just been built. Existing property will no longer be allowed to have losses on it deducted against other forms of income. So the conclusion to this is simple. If you think Labor is going to win the federal election, you've got just over 1 year if you want to buy an existing property and negative gear it. Having said all that, the property market's been pretty strong here in Melbourne. Clearance rate hovering around 75% on average. Melbourne house prices still rising, in contrast to Sydney where they've been flat at best. Still, we have got an election coming up, and as we know, it is a time of uncertainty for the share market, for property buyers, and for everybody who watches these sorts of things. And remember, of course, if you're thinking of buying or selling a property, either as an investment or as your principal place of residence, don't hesitate to contact your local Hodges office. Their assistance can only add value to the process. For more information, go to hodges.com.au. Thank you very much for your company, and we'll do it again next month.